Hello and welcome to our Modern Money Journey. Just a brief reminder that I am not a licensed professional. This is not investment advice. This is for entertainment purposes only. Hi everyone and welcome back for Adventure 6, where we're going to talk about investment funds. First, let's define a fund. A fund is a collection of pooled money used for investing, typically managed by a financial advisor. In this adventure, we're going to talk about three types of funds. We're going to discuss mutual funds, exchange-traded funds, also known as ETFs, and briefly discuss hedge funds. So a mutual fund is an investment fund that average everyday people can participate in. There are many different kinds of mutual funds, and they can be divided by many different categories depending on the assets that they purchase or the strategies that they employ to try and gain capital. Mutual funds can be broken down into four main categories when looked at by the investment vehicles that they use. There are equities mutual funds, which invest in equities, also known as stocks, as we've discussed in previous adventures. There are bond mutual funds, which invest in bonds. These are also sometimes known as fixed income mutual funds because of the coupon payment that's received for holding a bond acts as a fixed income source. There are also hybrid mutual funds, which employ both asset classes. And then there are also money market mutual funds, which deal in very short-term money loans and bond loans. Mutual funds can also be divided up by other types of classes, but some specialty ones that I'd like to mention real quick are tax-saving funds that are usually set up to help organizations save money on taxes. There are also funds that are set up to invest in certain regions or areas. There are also mutual funds that are set up to invest in specific sectors of these markets, like the 11 sectors that we've mentioned in the equities markets. There are also index mutual funds, which are set up to follow a specific index, like the S&P 500 or the Dow Jones Industrial Average, as well as a whole host of other indexes. The value of a mutual fund is determined by its net asset value, or the value of its assets under management of that fund. The next set of funds that we're going to discuss briefly are known as exchange-traded funds, or ETFs. Exchange-traded funds, unlike mutual funds, are obviously traded on exchanges, and thus instead of their value being determined by their net asset value or their assets under management like the mutual funds, their value is determined by the buying and selling pressure on the exchanges where their shares of those funds are sold. Many of these exchange-traded funds, or ETFs, possess assets such as equities or stocks, bonds, and commodities like gold or silver or oil. Due to ETFs' ability to be traded like stocks on an exchange and their low expense ratio in comparison to the management fees of a traditional mutual fund, they have become a commonly used investment vehicle by many. In addition to ETFs being easy to access because of their availability on exchanges, they also offer the ability to instantly diversify your portfolio. So I'm going to actually take a moment and open up my Robinhood account and show you guys how to buy an ETF on Robinhood. Alright, let's open up my phone. Okay, opening up Robinhood. Alright, we can see that we've got about $37 in purchasing power. We can come down here to the magnifying glass, and we're going to be buying a share of Invesco Power Shares S&P 500 High Dividend Low Volatility Exchange Traded Fund, or ETF. So we go to the search bar, put in the ticker symbol for that ETF, which is SPHD. And there it is, Power Shares S&P 500 High Dividend Low Volatility ETF. Let's look at it. You can see it's down about 1.8% today. It's at $33. We're going to take a look at some of its fundamentals. And then we'll hit trade. We will buy in shares. We will buy 1 share. It's going to cost us about $33. We'll hit review. Swipe up to submit. And we've got our 1 share of SPHD already. See, our position is now 1 share. So the reason why I purchased SPHD is because it gives you a stake in a wide array of high dividend yielding companies in the S&P 500. So by purchasing it, it offers you instant diversification amongst those companies and a good solid dividend yield to help with that cash flow. Some examples of some well-known investment firms that offer mutual funds and ETFs are BlackRock, Fidelity, and Vanguard. Alright, lastly we're going to talk about hedge funds. Hedge funds are investment funds for high net worth individuals and accredited investors that are managed aggressively. Hedge funds and the managers of those hedge funds often employ a mix of several different long and short strategies that include the use of derivatives and other leverage techniques which amplify losses or gains in the markets. Hedge fund managers are also among some of the most wealthy individuals and highest paid individuals in the United States. In 2019, the highest paid hedge fund manager in the United States took home $1.8 billion with a B. The 5th highest paid hedge fund manager took home $1.4 billion. You could make $1 million a month, every month, for 100 years, and you wouldn't make working what they do in 1 year.
Show me the money! That's it, brother, but you got to yell that shit! Show me the money! I need to feel you, Jerry! Show me the money! Jerry, you better yell! Show me the money!
There's nothing part of the way for me. It's just...
Alright, you bulls and bears, I'll see you next time on our upcoming adventures. Well, I was trying to think of something to do that and then be like, that'll make you sleep good tonight or something. Well, then do we even need to redo it again? Because then we can just something like, I'm rich, or some shit, you know? Alright, all you bulls and bears. Alright, all you bulls and bears. Just keep my hand up the whole time.